Very good. Steve, let's hear from you then. How's your portfolio done in the last 6 months?
Rubbish. My portfolio has gone up, but it's gone up mostly because it's gone up by less than the amount of cash that I've put into it. And I think that may even be true. I'm not sure it's true over the last three. I can't quite work it out. But I look at where I was at the start of the year. I look at where I am now. I've completed what I consider to be completing my ISA, bearing in mind I leave four aside for a lifetime ISA. So that's actually 16, not 20 in my case. And I am not up by 16. So some of it's gone somewhere. And I'll tell you about where in a moment. But in the last sort of quarter or so, I got four sales, one of which surprised me a little bit in that I've sold 4% of my JD Weatherspoon stake, all of my stake in both US railroads and Southern Copper. And Southern Copper, we talk about this quite a lot, and it'll feel strange next time we do a portfolio update when neither of us talks about this thing and asked whether we're going to sell it, but neither of us currently has it to sell. So unless we go buying it back again, which not necessarily ruling out, never say never with this stuff. And looking at the copper cycle, I still like that amongst the copper miners in general. But like you, it got to a point where it had annoyingly both gone up an awful lot and was never going to become a meaningfully big part of my portfolio, even with the occasional random stock dividend that I never quite fully understood why they were doing it. So that's gone. And the railroads I didn't expect to sell. Just a case of better opportunities came along elsewhere, or what I consider to be better opportunities anyway, came along elsewhere. Because, of course, you'll remember that the start of Q2 happened, and then 2 days later, Liberation Day happened, and then everything went everywhere in the stock market, and a few other things also kind of happened that were weird along the way as well. And it's been things like that that have caused me to think, oh, I can't miss this. I've got to buy this. Something's got to go. It's going to have to be both railroads in this case. And I knocked 4% off my JD Weatherspoon thing because I wanted some cash and I was cross about the lack of a round number that my share count was sitting at, which is not a very good reason, but it is the reason that I sold part of it and not all of it. That, by the way, has turned out to be a mistake because since then, it's been the best performing stock in my portfolio over the last 3 months. It has gone up 38%. And I got all of it with 96% of my thing. I haven't bought anything in there since then. So 96% of that got all of it, and 4% of it got about a fifth of it. I sold it slightly up from where it was at the start of the quarter, but not a massive amount. But that's been my best performing thing. The other thing that's gone really well is Tristel, which is up 36% for reasons I do not know. They've done very well lately. They managed to get approval for their ophthalmic device solution, which is a foam cleaner basically for ophthalmic things. They previously had an ultrasound probe cleaner approved by the FDA, so they can now go selling that. The stock went nowhere on that news, immediately on that news, for I think the reason is the market is currently unsure, I think right to be unsure, whether anyone's actually going to buy it because it is quite expensive and it's not an amazing time to be in the US healthcare industry. So that it's not immediately a given that, okay, FDA approval and a very good product by the look of things, as far as I can tell, automatically means now we go print money. So the stock, but then since then it's gone up a hell of a lot, and I don't understand why in the slightest. And that makes me want to take another look at it because it's sort of odd when that happens. On the other side, the kind of buying side, while it shows up as I've bought Rentokil, and I have bought a bit of Rentokil, but quite a lot of that is hooking it over from my GIA or my Invest as Trading 212. Call it. So that now plonks itself into my ISA. That's done all right. I spent ages not owning that thing because around the start of ISA thing, I sold it out of the Invest. Thought I'll buy it back. I refused to buy it back at a higher price in the ISA and get done on the spread there. I'll wait till it comes down. It took about a fortnight to get back to somewhere where I thought, right, I'm actually going to go and buy this thing again now because I refuse to pick up this cost. I'm going to have to pay stamp duty to go and buy this thing again. I'm not getting done on the spread too. And it took me a long time sitting around, but I got quite a nice cash return from trading 212 at that point. I was getting nicely used to push notifications saying I was earning about a quid a day, which was good fun for me. I've also bought 3i, which is a genuine buy. After one of their sets of results, their stock went down quite a bit for about quarter of an hour or so. And this time I was actually fast enough in that quarter of an hour to go and buy the thing. So I'm up about 7% on that, which is fun since it's been largely flat since then. The big one that I've been buying is Bunzel. That's down a lot this quarter. It's down about 30%. It's one of the worst performers in the BritBox, which we'll get to shortly. And a tiny bit of my Bunzel investment caught that big drop. The vast majority of it did not. I'd started to kind of edge my way into Bunzel. Then it went down big, and I thought, okay, time to clear out the railroads. We're going Bunzel shopping here, because railroads are down a little bit and sold them cheaper than I would have liked to. But we Bunzel down 30 or so after a profits warning. And they have since, their most recent report has basically said, yeah, we're holding level behind that. And I was kind of pleased it wasn't another profits warning, to be honest. We're faring okay. Other things I've bought, I'm roughly flat on that position, but that's as a large amount of averaging down a very small position with a lot more cash. Other things that are down a chord as the oil price comes down. It was doing quite well briefly, and then it followed the oil price pretty well, but it has chucked out some decent dividends, and they're buying back quite a bit. DCC's spin hasn't worked the way that I imagined in terms of the share price, but the thing now looks to me just like better value, so we will see. Celebros is my worst performing stock of the last 3 months. It's down 30%. That is not terribly impressive. And I'm not sure why, to be honest. I look at their RNS every time there's a big move, which is roughly every other day in either direction, but probably twice as many downs as ups. And there's never anything to look at there. They said revenues were going to come in slightly light, but this is a little while ago, and profits were going to come in slightly higher. So it's not an end of the world thing. It's a kind of revenues warning, I guess, not a profits warning. And I bought some Tristel, which has done great since I acquired that. So that's the kind of best and worst of it. That's pretty much where I'm up to, Steve.
Yes, sorry, I was just checking there. Last time we talked about Celebros, we had somebody who worked at Celebros reach out to us, Steve, and say that we did a pretty good job of discussing what they did. So that was Hugh. Thank you, Hugh, for doing that. I was just checking out. I forgot your name. I do apologise. So yeah, that was an interesting one for me, Steve. So yeah, there's a few in here that you've snuck by, and I didn't realise you'd actually bought. So 3i Group was definitely one that I didn't realise you'd bought. I can't remember if did we have a conversation that you'd gone so heavy on Bunzel. If we did, it's probably just left my sort of like lack of sleep addled brain over the last 6 months. But I actually think your portfolio is in really good shape, Steve. And the one that I would have said to you, like, what is your plan with this, sort of 3 or 4 months ago, was JD Weatherspoon, and that has proven to be a fairly inspired pick, really, Steve. It has absolutely rocketed off. And with the good weather to come, Steve, I hear 31 degrees in my area on Monday. I think there's... They'll do even it's going to be nice this weekend as well. So I would imagine they'll do well this weekend as well. So I'm still kind of surprised to see sort of Games Workshop at the top, Steve, and not being touched. I assume that one's just you're just leaving that one to plug away, and then you've still got your positions in Amazon and Berkshire at 3 and 4, which very rarely. I don't think I've seen you add to them in quite a while. So I'd be interested in an update on your current feelings on both of them too. And outside of that, you've got Citigroup, which has dropped from where it was 1 6 months ago. It's now 10 and remains at 10. And it's quite a small position now, Steve. And I sort of look at that and look at Diageo, which you've added to, and think to yourself, I wonder whether they'll still be here in 3 months' time. So appreciate I've given you a bit of a list there, Steve, for colour, but any colour you want to add on those ones?
Citigroup had a limit, so I'm going to keep looking. Last time I told you this, it activated while we were recording, but market is now closed, and I think I can tell you with confidence that Citigroup is still part of my portfolio. I had a limit sell set for 85, and last time I had a limit sell set for 80. It triggered at about 83.5 when I set one before, and that was while we were talking about it. Earlier this week, shares in Citigroup got up to 84.75 or so, falling slightly short of my sell target here. And actually, from what I can see of this, it looks like exchange rates have moved relatively unfavourably here for my Citigroup investment. So I don't actually stand to make as much money selling this lot at 85 as I did selling the previous lot at what turned out to be 83 something something. And I'm thinking at the moment it's reached a level where it's probably high. When I sold that first half before, I thought, why didn't I sell the other half? I don't have an amazing feeling about this thing at this price. And it subsequently went back to a price where I did feel pretty good about it because it was, I mean, a lot of things went down at that point. It was Liberation Day, and Citigroup has a heavy global exposure. And that puts it in a worse position than most kind of US banks when it comes to this sort of thing. So there's a chance that may not be there. Diageo, I sort of think, is more likely to be there. JD Weatherspoon's is fascinating, isn't it? I mean, the more I think about this, the more I kind of like it. So hospitality is a miserable sector in general. And I was looking again earlier this week at the um, hospitality metrics that I tend to follow whenever they launch new stuff every month. And it's the same story again. Bars and restaurants are getting clobbered, and pubs are, I mean, in this case, they are doing fine, I would say. They're like for like sales across the sector, and the sector in this case, the people they survey, is not include JD Weatherspoon. But they were up by 0.5%, and the other two parts of that sector are going backwards at a rate. And despite that, we're seeing pubs closing. I think all of this has to be good for Spoons. The sector is growing. I think they're one of the best in the sector, and the competition's going away, which is even more helpful. They've said recently they're not shoving prices higher. They're kind of fiddling their menu a little bit to try and make things work at the prices that they have. I kind of like that move. I think they probably could put prices higher, but it stands to the more they hold them back, I feel more like wise-ish about this, right? Of the more you hold the prices down for now, the more you just put the competition under pressure, and everything is more expensive elsewhere. So the bundle thing, I moved sort of fairly rapidly on, and then went buying, and haven't actually touched in a little while, but the stock hasn't done an awful lot in a little while. I'm hopeful on that. Celebris is the one that I'm increasingly wary about. These small things do tend to go in weird ways here, and I wonder what's happening because they are so often radio silent. No real reason for thinking anything bad's happening, but you don't hear an awful lot in terms of coverage, and that's either your opportunity to get in there where no one's paying attention. It's also your opportunity to miss something that isn't being reported. So that's the one I'm wariest of. And at times like this, I start asking myself, well, do I really understand tech stocks like this? Should I just have banged more of this into WH Smith, which is over in my invest account? But yeah, it's been JD Weatherspoon keeping the show on the road for the last few, because even Berkshire's down about 8% on the quarter. It's almost at a level where I'd think about adding to it. It's a book value of about 1.6, 1.5, somewhere around there. I think a little bit lower might get interesting. And Amazon reached a point where I thought it looked kind of fully valued, and then it reached a point where I thought it looked less than fully valued. It is my only US big tech at the moment, and I feel like I'm not confident enough to go off without anything in there, and none of the others really leap out at me as buys at the moment. I sort of think maybe Alphabet, but there's a bit more going on there than I care to worry about. Apple is down plenty, but they're not doing very well. Is the reason for that. Less said about Tesla, the better. I don't understand Nvidia well enough. Microsoft is I had nothing bad to say about Microsoft, but it always looks expensive. Actually, saying about Meta, Amazon feels like the one for me, and I'd rather bet more on Amazon than I think go in any of the others.
Yeah, fair enough, Steve. I would agree with you there. Again, I think mine and your Amazon positions are roughly similar. They're in kind of wait and see for me at the moment. I think there's quite a lot of turbulence in the big tech market, and I'm really not prepared to go chasing after that in the hope of of hope of just kind of like grinding along and getting gains. Bex is interesting to me as well, Steve. It's perennially on my watch list, and I never really go to buy it. And my fears are probably unfounded, really, because I just worry about how much influence Buffett had and remains to have, and whether this is like this serious key man risk here. And in the back of my head, I know that a 90-odd-year-old man probably hasn't been running as much of the company as we're led to believe that he has, and that his deputies have probably been taking more and more and more responsibility, and he is just the figurehead. but my worry is that sounds really rational, and the market is often irrational about these things. And I wonder if I'll get the opportunity to buy it at a very good price when the market throws its toys out of the pram, when Buffett fully steps away from the business. And on the flip side, I've never owned it for longer than for very long, only a few months at a time. So I can probably get by without it. So yes, I like your portfolio at the moment, Steve. But I think I mean I wouldn't be surprised to see some change. So Citigroup, we saying that could go in the next quarter. Just right now, Steve, putting you on the spot. Where would that money go?
It's a very good question. I'm looking for something to fall big to try and help me out here. And Citigroup is one of my. You might have seen that based on portfolio wise, I am becoming increasingly UK skewed here. So I'd like to replace it with something US sided. And not an awful lot is screaming out to me from the US at the moment, which is perhaps not a massive surprise. The S&P 500 has shaken off its Liberation Day stuff and was, last I looked, new all-time highs again. The thing that's cheap in that side of the pond is oil, but I've already got cord, and I'm not sure I want to buy more of it, and I'm not sure I want to buy anything else. There are a couple of other things that sort of stick out a little bit, but what I really like is for the arse to fall out of Danaher even more than it already has, and then I'll go and buy that, and then I'll feel great about my portfolio. I'm probably not going to get everything I want there, so that's why I'm not in a tearing hurry to sell Citigroup. To be honest, I'll wait for it to get to the right price because it's not like something's leaping out at me. The thing I kind of like is Informa, but that's another UK thing, and I'm going to sit tight for that for the time being. You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.